Welcome to my channel. This is John Mazzara with Remax Results, and today I have some special guests. They're going to talk to us about a type of financing for purchasing a home that you may not be aware of. And I'm in Minnesota, but this program is available throughout the United States. Hussam Kutab and Mohammed Khalil are going to speak today, and they're going to go through a presentation. So, gentlemen, take it from there.
Well, thank you, John. Thank you for having us on your show. My name is Hussam Qutb. I am the Senior Vice President and National Sales Manager for Guidance Residential. You're in for a treat today. We're going to cover a lot of information around Islamic home financing, how it's available as we speak to Muslim Americans and all Americans in Minnesota. And before I begin, I want to introduce my colleague, Mohammed Khalil.
Thank you, John, again for having us, and thank you, Hussam. My name is Mohammed Khalil. I'm the Assistant Vice President for Sales and the Regional Manager for states of Minnesota, Wisconsin, and Illinois. I've been with the company for almost 10 years now, and I love helping people buying homes, especially when it comes to their special requirements of having their faith and not to compromise that while they're buying. The state of Minnesota is the center of our attention, and these programs are that we're going to talk about today are very good help when it comes to make home buying one step easier to a lot of home buyers in Minnesota. And hopefully with this presentation, we can answer some of the questions about that.
Wonderful.
Excellent. Well, John, and to your audience, we're going to talk a lot about sort of why Islamic financing, why Islamic home financing, and how does it actually work, and how is it different? We are the leading provider of Islamic home financing in the United States today. We've provided over $10 billion in this type of financing, and the demand was so significant that in the late 90s, we were looking at sort of this prohibition and what it's done to the American Muslim community. The prohibition, of course, that I'm speaking of is usury, prohibition against usury, lending and borrowing at interest, or in Arabic, the term is riba. And riba is something that is not permissible to partake in, to either pay or receive. So you'll learn today a lot about kind of how we got here, so who we are, and why we exist. Of course, why Islamic finance itself matters to our audience, and how is it different. And then from there, we're going to go into the 5 biggest myths about it, and then we'll talk a little bit about some questions that maybe will need to be answered to fill some gaps. But I always begin by saying or asking this question: did you know that we, Guidance Residential, we're not a bank? And I say that because a lot of people assume if you're going to be in the finance field, if you're going to provide financing, you must automatically be a bank, or you must be affiliated with a bank, a subsidiary of a bank of sorts, or something to that effect. Well, the simple answer to this is no. We are not a bank. And we are not affiliated with any banking institution in the United States. That makes us incredibly unique, by the way, because others who provide such services are somehow affiliated with conventional banking practices and conventional banking institutions. So who we are matters, and it matters not only to us, we believe it matters to our audience, for them to know, and we're a very transparent organization. And what we do matters, of course. We are owned by a company called Capital Guidance. It's a private equity, private investment group. It's a company that has been around for 60 years. And in the late 90s, it decided that it's going to invest heavily in the area of Islamic finance on a global scale. The organization itself, Capital Guidance, is a Muslim-owned organization. It's in 27 countries around the world, headquartered here in Washington, D.C., where near our headquarters of Guidance Residential. The idea was to develop a company with a values-driven mission to create Islamic financial programs for Muslims in the US and abroad. Abroad, it's developed through Guidance Investments, institutional financial products and services. But here in the United States, more retail type products like Islamic home financing for the average consumer to be able to achieve the dream of home ownership. The companies that you see below, Guidance Financial Group is the global entity for Islamic finance. Guidance Residential is the US-based company for Islamic home financing here in the United States. Guidance Home Services is actually a sister company of Guidance Residential, also a subsidiary of Guidance Financial Group and Capital Guidance. That organization has a network of about 1,600 real estate agents and ones that understand our program, like John, for example, at Remax. And then we have Guidance Securities and Investments that works both overseas and will work in the United States shortly here in the coming quarters and years to offer investment products for the American Muslim community. Guidance Residential, since its launch in 2002, has grown from 3 states to 34 states. These are the states we operate in. We provided over $10 billion in this type of financing, and we've helped over 40,000 families achieve this dream of home ownership while not compromising on riba or usury. As you can see, Minnesota's at the top there. It's been a state that we've been operational in for some time now. So how did we get here? Our beginnings. We undertook a major investment towards research and development that entailed 3 years, millions of dollars, and 18 law firms that specialize in the U.S. housing industry, U.S. finance, as well as 7 of the world's leading scholars in Islamic financial transaction laws. That 3-year research and development project was innovative in so many ways and remarkable. It allowed us to work closely with Freddie Mac and Fannie Mae's legal divisions to help them understand how structuring a home financing contract did not always have to revolve around lending and borrowing, and that it could revolve around something like co-ownership or partnership, as in Islamic financial practices promote. So this was a massive effort that ultimately led to the development and the launch of the declining balance co-ownership program, which is essentially the program that establishes the co-ownership between the customer and guidance in the ownership of a home. So there is no lending and borrowing of funds, and this was quite remarkable and quite ahead of its time. We involved, like I mentioned, scholars that were distinct in this specific field in Islam. Namely, these are the scholars that were involved. The gentleman in the top right, former Justice Muhammad Taqi Osmani, happens to be the chairman of our independent Sharia supervisory board. He helped us assemble the rest of these scholars to help in the development of the program, and every single year after that, till today, they audit us once a year to ensure that our contracts remain consistent with Islamic beliefs. This is a major component of Islamic financial institutions, to have an independent Sharia supervisory board to ensure the integrity of the program. But these are your leading scholars. In fact, all of these scholars, including Justice Muhammad Taqi Osmani, have served or currently serve on the board of IOFI, the Accounting and Auditing Organization of Islamic Financial Institutions, based in Bahrain. This is the standard-setting institution, standard-setting body for Islamic finance globally. And it also sets the standards for central banks, financial institutions, who want to adhere to Islamic financial practices. Retired Justice Muhammad Taqi Osmani happens to be the chairman of the IOFI Sharia Supervisory Board. So that tells you a lot about him, and him really being the leading scholar in this field today. So the prohibition itself on usury, on riba, what does it mean and where does it stem from? In the Quran, the permissibility of or the impermissibility of usury is pretty clear. It says, those who take unlawful interest, or riba, will stand before God as those whose minds have been corrupted. They say that commerce is just like interest, But God has made commerce lawful and has forbidden interest. In the Quran, this is a testament to the fact that even during the days of the Prophet, sallallahu alaihi wasallam, Prophet Muhammad, people still didn't know the difference between interest and commerce. And it says here, they say commerce is just like interest. So there was confusion even during those days. So clarifying is something that is timeless. We must always clarify the difference between a riba-based or interest-based transaction and a non-interest-based transaction. So what is riba? What is usury? It is profit collected or paid out on a loan agreement, a loan transaction. The reason being is loans in Islam are charitable acts. They're charitable contracts. They're not intended to be used in commerce, in trade. They're relegated to that area where you are trying to assist an individual come out of hardship. And lending them money is one way of doing so. So lending money has restrictions on it. You must lend $1 for $1. You cannot lend beyond that. So therefore, that transaction, it's a sacred transaction. It's protected. But if you're going to assist somebody in an investment transaction, let's say like a purchase of a home, that's an investment. You must use a different type of contract, a contract that actually has the financier involved with some skin in the game, not just simply sitting on the sideline loaning out the money. But riba, usury, is the creation of profit from nothing. It's like me saying, here's $20, pay me back $25. What did I do? I didn't really create any value. There was nothing being done. I didn't take any risk myself as the person holding the $20. I'm just selling paper for more paper. And that is the definition of usury or riba as we know it today. And by the way, it's prohibited in all monotheistic faiths. You can even see it in the Old Testament. In Exodus, it's pretty clear on this prohibition. So why does Islamic finance matter today more than ever? If we look around the world today, we see rising inequality, debt, poverty, unemployment. In fact, today, the richest 10% of the population hold 86% of the world's wealth. And the top 1% alone account for 46% of global assets. So what we see today is rising inequality. It just continues. And in addition to that, there's rising debt. 30,000 children under the age of 5 die every day due to debt. That's according to UNICEF. You also have rising poverty in the world. But you don't have to look internationally for this. You can even just look at the US, our own backyard. You have about 653,000 people that are considered homeless in the United States as of 2024. You have 37 million people who live in poverty here in the United States. You have 13.5% of US households food insecure here in the United States, the most powerful country in the world. And unemployment just continues to rise. In 2017, it was 200 million on a global scale. Today, 210 million people are unemployed in the world. So why do we have such rising inequality, rising debt, rising poverty, unemployment? Well, the root causes are coming from our modern economic system, the way the monetary system works. Fractional reserve banking does not assist in this area. You have a monetary system that has a value neutral philosophy where profits above anything else reign. You have a debt-based economy. And the process in all of this creates the concentration of wealth where there's lobbying efforts, there's speculation, deregulation, and also exploitation in this entire process. And the result is what we just talked about. But most people don't know that the money in our economy, most of it at least, is created by banks in the form of bank deposits, the numbers that appear in your bank account. And so if we look at this very complex system, and we're not going to cover this because it'll take us 2-3 hours, John, to go through this. But if you look in the way the money creation flows in the US Federal Reserve System, our connection as consumers is really down where the individuals and the businesses interact with the commercial banks, the two darkest boxes. And what you have here is the multiplier effect, how our funds, our capital, when deposited for safekeeping in banks, those funds act like a multiplier, where we are essentially feeding the fire, so to speak, fueling it. And what you essentially have is this. Those of you who are not familiar with fractional reserve banking, here it is. The system, the cycle works like this. You deposit $1,000 in the bank. The bank is supposed to, it's supposed to be a place for safekeeping. It's supposed to hold your money so it's safe. So, you know, we're not putting our money under our mattresses or at home. So you deposit it into a bank, but the bank doesn't just sit and hold your money, as you may think. The bank takes your money and lends it out. In fact, 90% of it gets lent out, but they do reserve 10%. That's where the word reserve banking comes from, fractional reserve. So 10% is reserved. So $100 of your $1,000 is reserved. $900 of your $1,000 deposit gets loaned out, lent out. So the bank lends out $900. The consumer who borrows it either on a credit card or a personal loan takes it and spends it. And the person who receives it, let's say perhaps they spend it on a ticket, a flight. So they buy a plane ticket. The airlines takes that $900, issues a plane ticket to the consumer, and then what does the airlines do? They deposit that $900 where? Back in the bank. And the cycle starts over again. So then that $900 gets deposited into a bank. The bank reserves 90, but loans out 810. Again, 90% gets loaned out. Consumer number 4, in this case, now goes and spends that $810. Whoever's on the receiving end is going to take the 810 and deposit it into a bank. And the cycle repeats and repeats. Just by repeating this cycle 3 times over, $1,000 becomes $3,439 in the system. Was there any new money created? Well, not real money, right? It's almost like it's fake money. So this is the fractional reserve system. And the problem with this system is, you know, it creates wealth out of thin air, just like we just talked about. It creates a debt-based economy. We're now relying on this heavy, heavy layers and layers of debt, which is a fictional financial economy. And it can turn our economy 26 times larger than anything ever really produced, real production on Earth. And it does fuel the transfer of income and wealth to the 10%. The 90% are net payers of this bank interest. The 10% are net receivers of this bank interest. And so there you have that instability, that inequality that occurs. But really, the root cause at the end of the day is that I mentioned earlier, the value neutral approach to our monetary system, our economy. When you have a value neutral approach, meaning you only look at the returns, that's all that matters. How do I get returns? How do I increase returns for myself and my shareholders? Then what I'm going to do is, I'm going to do it legally, of course, but if something is illegal, I'm going to work to deregulate it. We see that today. So deregulation then gets a lot of money poured into it. And then there's some deception that occurs along the way. And then we have our booms and we have our busts. So you can see that today, the ups and the downs, the cycles, where if the core value is timeless, it's not a value neutral, it's a timeless values that have borders, that have essentially limits to what we should or shouldn't do. Regulation would be welcomed within reason. Then there's a complete transparency in effect that can create stability for society. Timeless values means you don't make something that you know is downright irresponsible or not within the value system that we all carry. You don't make it all of a sudden allowable because returns could be significant. You have to have some sort of limit to your values. And And the timeless value approach for us has been key, especially in Islamic finance in general. So Islamic finance, is it the solution? Let's talk a little bit about it, because we went at it alone. 22 years, it's been more than 22 now, it's almost 25 years ago, we went at it alone. We ourselves went at it alone, and we actually went out there to create a difference. So how is Islamic finance different? Well, first and foremost, the foundational principles of Islamic finance are pretty clear. They're rooted in divine law, so they cannot be changed. The timeless values we talk about are timeless for a reason. There's economic justice that's instilled into the system. There's circulation of wealth that is encouraged within the system. Commoditization is a key component of this entire system, and risk sharing is a requirement within the system. I'll play all of this out and show you how that works from a practical perspective in just a second. But Islamic finance transactions are based on investing, while conventional finance today is based on lending. That's the starkest difference I can paint. You have a win-win framework when you're investing. You have a real interest in investing in real assets. You have shared risk. You have just and fair profit and loss sharing. You have justice and equity in the economy. While in the lending framework, you have a win-lose framework. You have a system that creates debt. You have a risk that's constantly transferred, fully transferred onto those who are borrowing funds. There's unfair gains from profits and losses. You see that? And typically the rich get richer and the poor get poorer. So when we're looking at what type of contract to replace the lender agreement with, our scholars, our lawyers, the 18 law firms that we hired, all of them, when they worked together during that research and development phase, they were looking at what type of acceptable contracts can facilitate home ownership for American Muslims that would be scalable here in the United States. And typically there are three types of contracts in Islamic finance for investment purposes or trade. There's a murabaha, there's the musharaka, and there's the ijara. The murabaha is a purchase and resale. So I can buy something and mark it up and resell it to you. That's okay. I actually took ownership of it before I sold it. So I'm taking on some of that risk with it. Ijara on the far right is a simple lease. So I actually own something, I'm leasing it to you. I can actually make profit from that. That's permissible. And you can lease something because you're using it. You're using an actual asset, and you can pay to use things. That's permissible. Musharaka is partnership. And interestingly enough, our scholars ruled out murabaha and ijara as ways to facilitate homeownership in the United States. They felt like after drawing up the blueprints for both, they felt like those two have major flaws that wouldn't allow for the process to be completely compliant with Islam. So they went through the musharaka route. But there's different types of musharakas, as you'll see in this slide. Musharaka comes from partnership, sharing. But there's the typical musharaka, which is referred to in the Islamic contracts as shirkatul aqd. Shirkatul aqd is joint venture, joint enterprise. That's the partnership that we're all used to thinking about when we're thinking about partnership in anything in business or commerce or trade. It's where you would bring in your, whatever, 40%, your partner brings in 60% of the required capital, you invest in something, you develop it, you grow it, and all of the expenses are shared 60-40, all of the returns are shared 60-40. It's pretty equal in terms of distribution. That's shirkat al-aqd. That is not, I want to clarify for our audience, the contract that guidance employs. Guidance employs a contract more closely aligned with shirkatul milk, which is joint ownership rather than joint venture. Joint ownership comes from inheritance laws. The scholars use inheritance laws where perhaps, and it's compulsory. The compulsory version of inheritance laws is where, let's say, two siblings lose their parents, and their parents own an asset like a home. And now the two siblings need to decide: do they sell the asset, the home that they have now inherited, or do they live in it? Perhaps there's one of the siblings that says, I want to live in that home, while the other says, I already own a home, I have a home, I don't want a second one, please buy me out, or, you know, sell my shares. I want to liquidate my shares, which is, again, something that Shirkatul Milk works through. And so in that aspect of it, the transfer of ownership is developed over time, perhaps, so that one party can live in the home and buy out the next party's, the siblings' ownership stake. Now, they're living in the entire home, so they also must compensate their partner for using their share of the property while they still are trying to buy it out. That's where this structure comes from. So Musharaka was the most equitable form of interaction between the consumer and the financier that our scholars supported. They felt it was more equitable. Ownership is established from the very start. Transfer of ownership occurs in real time. While the other two transactions, murabaha and ijara, there were issues or flaws in those forms of contract if applied here in the United States. Now, they could be okay overseas in different places of the world, but here in the US, given the laws, the murabaha, there's no permissible path to securitization for the murabaha. So there's no way to actually invite a partner like Freddie Mac and Fannie Mae to securitize it, or at least securitize it in a halal method. So there were flaws with that, and especially with the fact that if you needed to refinance a murabaha down the road, you would have major issues. Ijara, the leasee doesn't obtain any ownership until the very end of the arrangement. There's a problem with that. It's a high degree of risk that's being taken, and we want to avert that type of risk onto the consumer. So now, let's take a look at, just in a simple example of conventional versus the Sharia structure, what that looks like. In a Sharia structure like guidances, the co-ownership, the decline balance co-ownership program, the buyer brings in a co-owner. In the fact, we are the co-owner, brings in the co-owner, which is guidance, to co-own the property together. With our funds, we become a percentage owner in the property, and we can become a percentage owner in the property up to 97%, where the consumer can bring 3%. The term is established for 30 years, 20 or 15 years to buy us out. Of course, you can buy us out anytime without a penalty. But over that term, each party's ownership is determined by the down payment, and then the monthly payment, which is made up of two portions, utilization fee and acquisition amount. The utilization fee is you are paying guidance to use the portion of the property you don't yet own, but you're living and enjoying that portion of the property. And then you are paying guidance an acquisition amount. Really, what you're doing is you're acquiring from guidance its share. So the monthly payment, which is fixed, is made up of those two components. And over time, you are owning more, guidance is owning less. So guidance is actually charging less utilization fee, a greater amount of acquisition amounts is being applied now, until you're 100% owner of the home, and we are essentially removed from the ownership, from the deed of the property. In a conventional mortgage structure, you're simply borrowing the funds, going out and buying the house. There's going to be essentially principal and interest payment on the property, and you make those repayments of interest and principal because the principal is the loan amount that you borrowed, and over the course of the loan, the borrower, as they're repaying the debt, will repay it in full and become the sole owner of the property. So now, what makes this different from a practical sense versus just the contractual sense? The contractual sense is real, changes the characterization of the parties and their relationship to one another. But what makes us different on a practical sense is the following. Conventional mortgage companies, if you're late making a payment, will typically charge you 5% of your monthly payment. That's a standard. And typically what that equates to is some of that money offsets their cost, to remind you, but the majority of it is profit for them. They profit off of you forgetting to make a payment. So on a typical $3,500 a month mortgage payment, if you're late, you're going to pay $175. $50 is what it really costs them to remind you that you're late. The rest is profit. We are not allowed to make profit when somebody forgets to make a monthly payment. We are required to remind them by sending them a second mailer, by calling them. So there's administrative costs involved in us reminding somebody who's not meeting their obligation on a monthly basis, but we're only allowed to recap the cost, which is $50. So on every late payment fee, there's a fee that's $50, capped at $50. And it does not compound like conventional mortgage companies compound their late fees. There's also something called non-recourse and shared risk. Now, this is where it gets really interesting. In the case of default, conventional mortgage companies can come after you if they foreclosed on the home, sold it, and didn't recoup the amount of money from the sale of the property, the amount of money they loaned you. And that we saw that happen, if you remember, John, I think back in 2008, 9, and 10, with the financial crisis, many people essentially turned in their keys to their banks and said, look, my house is not worth as much as it was when I first bought it, and I cannot make my payments, take the house. Well, those banks sold those homes, but sold them for a loss. And when they realized the loss didn't cover the actual amount they loaned the consumer, they issued deficiency judgments through the courts to chase those customers down and to collect the difference. Now, those customers went to rebuild their homes, and years later were served these deficiency judgments. They were served and essentially had to owe the banks all this money plus the late fees plus the compounding interest payments, and that's recourse. Now, what that means is if you cannot repay, they will have recourse on your other possessions like vehicles, savings accounts, mutual funds, whatever it may be. They can come after you for it because they're coming after the default on the loan. Guidance is not lending money in our transactions. So therefore, we take an ownership stake in the property, and therefore, if we get to a point where there's default, if we get to the point where there's potential foreclosure, if the house sells for less, let's take a $100,000 house that we bought it together at 90-10, let's say, and we put in 90,000, you put in 10,000, we're 10%, 90% partnerships in this home. If the home, for whatever reason, on the foreclosure market sells for 70, guidance takes that $20,000 loss, and the customer takes a $10,000 loss. So that's a non-recourse commitment on every contract in every state. Some states have recourse laws that limit, but the financier from coming after those buyers in case of default, but the majority of states do not. Now, shared risk, we go beyond the pale here. We go beyond the recourse, the non-recourse commitment. If the property is lost due to a natural disaster, we see natural disasters occurring today with fires, with hurricanes, and increased activity in these areas. If the house is completely destroyed and the proceeds from the insurance company do not meet the amount that we originally contracted on, so if they fall short, then guidance will share in the loss pro rata, meaning we'll share in the loss according to our ownership shares at the time. So in that $100,000 example, let's say the house is destroyed due to fire, due to hurricane, whatever that natural disaster may be. Even eminent domain is actually covered in this area, because the trigger event in this case is not you defaulting. The trigger event in this case is out of our hands. And so you did nothing wrong. Nobody did anything wrong in this case. We ended up losing the home. But let's say the insurance proceeds fall far short, $70,000. Let's use that example on a $100,000 property they originally bought. And we were 90% owners at the time. You were 10% owner. We would take the 70,000 proceeds and we would split them 90-10. No other financial institution in the mortgage industry today does this. You don't have another mortgage institution or bank that does this type of loss sharing. Not even any other Islamic finance institution. We've looked into it, trust me. We're the only Islamic finance home financing institution that does this. We're true to the spirit of Islamic finance through the structuring, and therefore you get that shared loss, shared risk, as it's stated in our contracts. And that's because we are not a bank again. We can do these things. We've been recognized for a lot of what we've done. We've been often called the most consumer-friendly home financing program in the nation. We were recently recognized by Housing Wire in 2024 for being a vanguard in the US housing industry, for having a major impact, a positive impact on the housing industry. You can see all of these things on our website. I'm not going to bore your audience today with all of this. But really, one of the biggest myths that we dispelled today is, aren't you just like the banks? Aren't you also maybe owned by the banks? The answer is no. We are not. Banks are typically actually prohibited from co-owning real estate with consumers. That's something that a lot of people don't know. And even their subsidiaries are prohibited because they're governed by the same banking laws. And therefore, by design, we've chosen from day one not to establish ourselves as a bank. We are an LLC, we're a financial services company owned by a private equity investment group, as we mentioned earlier. And you know, I can go into a lot of these other things. We covered them earlier in the earlier slide, but we are truly unique in that sense. A lot of people really find that to be true once they start digging deeper, doing their research. And this one comes up a lot. Isn't this the same as a loan? This is the second myth that's out there. Isn't this just the same? You're just changing words. Well, you and I know, John, that contracts matter. What you write in a contract, and people need to read the contract that they sign, matters. Our co-ownership commitment agreement is the title of the contract that people sign. It's called the co-ownership commitment agreement. It's not called what every mortgage company uses, which is lender agreement. Anytime you sign that big stack of documents at the settlement table, the one document that you're signing that connects you to your financing institution is called the lender agreement. That does not exist in our documents. You sign the co-ownership commitment agreement, and it establishes that there's going to be an LLC that takes ownership of the home, but not the whole home, the percentage of the home that Guidance is now investing in. And that's what establishes a true partnership, co-ownership in the property. And of course, then this LLC, by the way, also introduces added protections for the customer and Guidance, because we also thought 2 steps ahead. We knew that if we're going to co-own with thousands and thousands of homeowners throughout the United States, that if any kind of litigation arises against us or against our partners, it could spread. And so that LLC actually introduces added protections for both Guidance and its customers. So there's a sort of a double positive in the LLC structure that we have, establishing this co-ownership with our customers. We have been endorsed by the Assembly of Muslim Jurists specifically for that structure, specifically for establishing the LLC and really consummating a real co-ownership. The Assembly of Muslim Jurists, sometimes referred to as AMJA, is a group of 600-700 imams in the United States who issue declarations on different things that are permissible, deemed permissible or not permissible for Muslims in America. And so we were really honored and fortunate that they deemed Guidance as the most permissible path for American Muslims to use for financing their homes. We were deemed as the most permissible above any other alternative that's out there in the marketplace. This one definitely comes up a lot. So where do you get your money from? Do you borrow from Freddie Mac and Fannie Mae? You mentioned them earlier. Well, first of all, I always like to educate our audience about who Freddie Mac and Fannie Mae are. A lot of people don't know. They think they're lenders. Freddie Mac and Fannie Mae are government-sponsored enterprises. They're called GSEs, and they were chartered by Congress to actually provide liquidity in the housing market. They realized long ago, Congress realized there's not enough liquidity out there in the U.S. financial system to finance homes for Americans. And home ownership is really the cornerstone of our economy. It generates so much in terms of, if you think about the light bulbs, the plumbers, the electricians, all the things you buy at Home Depot or Lowe's that helps fuel the economy, it's housing. And the housing industry has to have liquidity so people can go out and buy homes. And if there is no liquidity, then we're kind of slowing the economy down. So these institutions, Freddie Mac and Fannie Mae, were chartered by Congress to essentially create mortgage-backed securities to invite global institutional investors to invest in these mortgage-backed securities. So what we did is we reached out to Freddie Mac and Fannie Mae saying, we're not producing loans, we're producing co-ownership contracts that are permissible for Muslims, and we would love for you to securitize these by inviting institutional investors to invest in our percentage of ownership in these homes to allow us to free up our funds to go and finance more homes. And yet we still retain the servicing, meaning we are still front and center. People are still using guidance, paying their monthly payments to guidance. But Freddie Mac and Fannie Mae really helped us to build that. It's similar to what we call sukuk, which is a security in Islam, to invite investors in to invest in the returns from the utilization fees. So they are not a lender, Freddie Mac and Fannie Mae, they are not lenders, and they are not banks. They're prohibited from lending money. They're prohibited from lending money. So you've got to make that clear. They're prohibited from being banking institutions or being lenders. And so that's key. And that's something that a lot of folks don't know, but I'm hopeful that maybe shed some light on our relationship with Freddie Mac and Fannie Mae in the securitization of our Musharaka contracts. I talked about this earlier. The monthly payments are comprised of two components, acquisition portion and utilization portion. So each month, your monthly payment has a portion of it that represents the purchasing of Guidance's shares in the property. So you're literally buying shares from us each month. And another portion goes to essentially using the portion of the property you don't yet own. That's the utilization portion, utilization fee. And it's the way we make money. It's pretty transparent. We can charge you for using the portion of the property you don't yet own. We're giving you exclusive use and enjoyment of the entire home, a portion of it you don't yet own, so we're charging you for using it. And so, the last one here, people then say to us, doesn't it cost more? Doesn't it cost more? And really, for over 20 years, we've helped over 40,000 American Muslim homeowners achieve the dream of homeownership, and they didn't have to do that with a more expensive product. Today, we are incredibly competitive with the market. Our utilization fees are pegged with whatever the prevailing rates are today in the marketplace so that we can be competitive, and we have become extremely, extremely competitive. Our profit rates are equal to or less than that of major mortgage companies that are out there. We're both in the business of facilitating home ownership, and so we benchmark against what's out there today to identify what our utilization fee will be for the consumer. And we have an entire pricing department that reviews the average rates in the industry 3 times a day and adjusts our pricing accordingly. The only fee you're charged is the $11.95. That's the closing cost fee to guidance. Everything else is a pass-through cost. So we're incredibly competitive, and you get a one-of-a-kind product with a one-of-a-kind benefits across the board. So with that, I'm gonna stop sharing and open this up to a conversation now. John, thank you for the opportunity, John.
Oh, that was just wonderful. Thank you very much. I enjoyed it. The first time I enjoyed it as much the second time that I've seen you present it. I think you've covered some really interesting things. For example, just as an aside, the fractional reserve and the lending and the Federal Reserve being a private bank or a private entity, people don't know that. They think it's the government. It really isn't. And fractional reserve lending is something people don't know about. So I think that was really eye-opening for lots of people, I'm sure. What you bring to the market in the form of financing is something that no other lender that I'm aware of is actively doing. And we have a very large Muslim population within the Twin Cities, and I meet with them frequently, through my travels. And I've worked with your company specifically to help finance them, and using this type of a situation that you've created, the Musharaka contract, it's worked extremely well. And so what I'd like to share with the public is that this loan does work. I've seen it work. I've used it with my clients, and it exists. And so if you're a seller watching this, do not be afraid of this financing. You'll get to the closing table and your home will sell. If you're a buyer, this is a viable option that you can utilize to meet your religious beliefs, and it will function to help you purchase a home. It's really unique how you'd mentioned the foreclosure option and whether or not deficiency judgment and judicial or other forms of foreclosure that they can do in Minnesota, um, and go after people. The fact that yours is non-recourse is very unique. And from a overall cost perspective to the consumer, it won't be any more, it might be less to utilize your product than it is to use another product. One of the things I found extremely interesting when we were at your initial presentation is that in Minnesota, we have a product called the first generation homeowner loan, and that your product also works with that. Now, right now, there's two versions of the first generation. One of them's out of money, one of them still has money. But my guess is because it was so successful, it ran out of money in 6 months, that the state of Minnesota will probably come up with something in addition. So utilizing your financing, they don't have to give up some of the other down payment assistance programs. And maybe Mohammed could speak to that maybe a little better on how somebody would utilize your program in addition to using some of the down payment assistance funds that might be available from a county or from the state.
Uh, of course, John, thank you very much for asking. This is actually a very hot topic now. Everybody's asking about these down payment assistance programs and how they work. There is the program for that was launched for the first generation, where a consumer will be considered first generation if they never owned a home or their parents owned a home. The qualifications for that program comes with a property maximum amount or price, sorry, and the amount of that DPA is about 32, is capped at 32,000 or 10% of the property price, whichever is lower. With that said, this program, as to my knowledge, as of today, is not yet out of funds. The $35,000 first generation loan is a different program also managed by the state of Minnesota Department of Housing. And that's a different program that we are not part of. We are part of the $32,000 forgivable assistance. Now, also, we have been selected and we're proud to help the Muslim community in Minnesota with another program called the Welcome Home Down Payment Assistance. The Welcome Home Down Payment Assistance is up to 30% of the property price or $50,000. And that's actually for first-time home buyer, not first-generation home buyer, although there is a small difference between the both. You might be a first-generation home buyer, and you might be also a first-time home buyer, and you can layer both. You can take both in the same time. But if you do not satisfy the first rule, maybe your parents already owned a property, then you can satisfy the other one if you are a first-time home buyer. And there are small differences between those two programs, which is okay. However, the most important part is that we will help the consumer and the applicants in submitting the application with these organizations. We will also monitor the process so that if there's any communication from the down payment assistance providers, then our consumer know how to react, what to provide, and the timelines, of course. Now, the fortunate news is that the $50,000 program is still there. So if the $32,000 program might be depleted so soon, then the other program is still there, and we encourage actually consumers to take advantage of that program. Now, what they need to know about is that the more you are prepared is the better. A consumer cannot apply until they already on contract for a property. Okay, what that means? That means that they need to be already prepared with a pre-approval, working with the real estate agents like you, experienced in the market, John, and then in the same time, when they go on contract, to immediately inform their account executive at Guidance Residential that we went on contract. This is the purchase agreement, and they go through the process with application with the welcome home. That is actually managed by the NeighborWorks Home Partners, a very well reputable organization in Minnesota. Everybody knows about them. We have very good relationship with them. We have a good pipeline with them working on this first program. We will encourage again the consumers to take advantage of it. There is also a lot of other down payment assistance programs that have been before those two. And there's also chances that these also programs might be renewed. With that said, I don't want to go into the specifics, but these programs are very, very appealing, and they help people that I'm working with right now, me and my team, and they're actually sharing their sentiment with us that they will never become a homeowner except for these being available. So I really, really want to thank you for the opportunity to talk about these areas. And I want to thank all the agents like you who work with us and know about us. And I want to encourage our consumers who listen to this video to check the links and the information that we will share in the description so that they can go to the right places where they can collect more information from us and from you, of course, John. And with that said, I guess this is what I can share for the time being, and I'm happy to answer any specific questions that you may have about this. And that's my guess. Can do it for now. Yeah.
So if I'm a consumer watching and I want to buy a house, I'm going to contact the individual or the website phone number that'll be listed in the body, and then you'll get them in touch with, or however it'll be done, but they'll be able to reach out to an account executive and begin the pre-approval process. And then when I've worked with your company before, you've issued a letter of pre-approval so they could make a purchase just like any other lender. And then a question I had, so I'm not Muslim, I'm Lutheran, but it doesn't matter. But would I be able to use your financing, or what is the criteria for the Islamic financing? Let's say, could I use your financing, or do I have to prove, like, do I have to be a member of a mosque or something? Is there any proof of being a Muslim to be able to use your financing?
No, not at all, John. We have, we can't ask questions related to faith, right? So when people are actually financing with us or seeking financing with us, we're available to all, all Americans. There's no requirements except the guideline requirements that apply to all of our customers.
Okay.
And those guidelines are very straightforward. Hamad could go into those details of guidelines. We have to look at your credit scores. We have to, and on a pre-approval that you were talking about earlier, to get you a pre-approval letter, it doesn't cost you anything, and we will run a soft credit check so it doesn't ding your credit. And then we'll look at your tax returns, your bank statements, your pay stubs, those kinds of things, to ensure that you're going to be capable of being a partner that buys us out over the term. And those are requirements that are common in the housing industry in general. So nothing different there.
Absolutely. Well, that's great. So that's nice that everybody is eligible if they want to use this financing, but this specifically will comply with a religious need or desire, if that's how you want to go about home ownership. And it's unique in the marketplace. And you won't find this at the major banks. You won't find this at any other place. I mean, there are some other providers that don't have a very large presence. I don't run across them very often, but I do run across guidance in the form of, when I have a listing, other agents will have your pre-approval letter. You have a presence in the market, a respected presence, and 40,000 satisfied customers. That speaks for itself. So if you're watching this, I would encourage you to reach out to Muhammad and his organization and at least understand it as an option, in your purchase. I would love to work with you on this journey towards home ownership. However, we are a la carte, meaning you don't have to work with me to utilize this program. I'm bringing this to the population through my channel, but you can work with any agent that you like that's through guidance or wants to work with guidance. So don't feel like you have to work with me, but I'm open to it. So anyway, I'm in Minnesota. Again, my name is John Mazzara, and I thank you for watching today. I thank my guests for coming on today and spending some time sharing this wonderful presentation. And anything else you guys would like to share?
I'm good. Thank you very much, John. I'm not sure about you, Hassan.
Well, I just want to thank you, John, for the opportunity to educate your viewers about our program, our organization, and the uniqueness of it. That's all.
All right. Thank you. Have a wonderful day, guys. I'm going to stop this recording.